or does it look like?
So I'm going to start with, so Ruben and I put together a presentation on condos. I get tons of condo questions from all of you, which is great. Just let me back up for just a second, by the way. I've gotten lots of feedback and lots of communication from just about all of you. So I told Jordana this the other day, and I'll just say it to all of you. You guys have a fantastic team there.
Yay! Thank you.
You do. It's a fantastic group of people, and I'm speaking also for Ruben, but we really enjoyed working with you guys, and we're really excited about 2021 together. And it's special, you guys. Like we work with certainly like a couple other groups, but this one is definitely different. You guys have good team members. You're respectful. You're motivated. You all work hard. You all ask great questions, and we look at this, as a partnership, and it's very clear that you all do too. So anyway, it's been a great experience. So I just wanted to start there.
Thank you.
You got it. So when I talked to Lindsay and Jordana a few weeks ago, I decided to start. So I want to start doing more training with the group, and I want to do it more regularly. And I figured let's just start in the new year. And so as I'm picking topics to cover, and certainly share feedback with me of things that you'd like me to cover, but I get tons of condo questions. So I figured I would start there. I have put together a PowerPoint presentation that I'll just bring you through. It's not super lengthy. It's only about 10 screens, but there's a lot more granularity that I can go into here, but I want to touch on just the basics to give all of you a really high level on what you need to look out for when it comes to condos. So let me just back up for 1 second, and then I'm going to dive into this. When a condo gets financed, it's different in that when you finance a single family or a townhome, we approve the borrower and we approve the unit or the structure, right? Very straightforward. What's unique about a condo is that when you have a condo, we approve the borrower, we approve the structure, but we also have a separate approval process for the condo association itself, okay? Those aren't our rules. Those are Fannie Mae's rules. Those are FHA's rules. Like that's what all the regulatory bodies require us to do, okay? Why is that? Now, I get that question a lot too. Why is there a separate approval process? Well, the reason is because if you probably all remember, well, some of us do, back in 2008 when the market crashed, many condo projects really got hit hard because unit owners weren't paying their HOA dues, and the condo projects started to really fall apart because there wasn't enough money, to maintain them. And because there wasn't enough money, to maintain those projects, the units themselves really very quickly lost value, okay? So part of this approval process is making sure that it has a healthy HOA, that there's enough money set aside to continue to maintain the property, and that it's going to be healthy for years to come. So I'm going to go to my very, very professional slideshow here. All right. Sorry, let me get through that. Okay. Condo financing. Let's get through some of these screens. So first, we all know why condos are popular. I can get through that screen. Okay. So there are two different condo approvals, right? And this is what's really important to know. There's what's called a full condo approval process. And then there's called a limited condo approval process. By the way, feel free to take notes, but I also sent a copy of this to Lindsay that she'll send out to all of you after the meeting, okay? Now, I want to describe to you the differences between full and limited condos because there's a very different thing to know here. So what determines a full versus a limited? The project itself, the occupancy type, meaning if it's a primary residence, a second home, or an investment property. And then the loan to value. How much are they borrowing based on what their down payment is? All right, we're going to talk about we're going to talk about a full condo project review first. This is the most popular one for just about all of you who I've talked to. Most of the buyers that we're working with can be fairly limited on the amount of funds that they have to bring to closing, and thus they fall into this full review process, okay? So what you need to know is on a full project review, the maximum loan to value here is on a primary residence is 97%, meaning that they only have to put 3% down. 90% for a second home and 85% for an investment property. Now it says 85%, but I will tell you 80% is probably more realistic.
Only for approved condos? Because 97% down on a condo, isn't that really high in Florida? Where am I?
That's the maximum.
Right, so, but is that only for an approved project?
Correct. All of these are assuming that we have.
Okay, so one question we had recently that I'd love for you to help answer, how would people know if a condo is on the approved list or not?
Yeah.
Sorry, am I interrupting your flow?
No, you're fine. Well, so Fannie, so every government agency. So when I say that, I mean, you know, FHA, meaning HUD, VA, Fannie Mae, and Freddie Mac. Those are all the government agencies who we do these loans through, right? All of them have their own web portals or web pages that you can go to find out if the condo's already approved through them. Okay. The issue is that.
Thanks. Like Jimmy just asked this question, didn't he? None of us knew this.
I told him he could look online. I didn't give him.
Right. So are these like links that are easily accessible for us? So if we are wondering about a particular location, we could pop it in there and see if it's on the list. Is that how that works?
That is absolutely how it works. I can send all those links out to you after the meeting. The reason why I haven't included that is because probably 1 out of 1,000 are going to show up on that list, on those lists. The reason why is because, you know, mortgage companies like ourselves are doing the approval process now in the beginning for the buyers. And so
most review to determine if it's going to be approved or not. Is that right?
That's right. So most condo associations aren't going through the expense anymore of approving themselves through all these government agencies because it's a lot of money.
So do you guys understand what that means? Okay. Great.
And thank you for interrupting. If I'm going too fast or if I'm getting too mortgagey, please, you know, interrupt.
You're doing great. Keep going. We're good.
Okay. So what I'm talking about right now is assuming that, and I'll send out these links, is assuming that the condo project isn't already approved on these links, which I've done in the last probably 4 years. I think I've had 1 condo project in 4 years that I've seen on the approved list. And
how long does it take to do a review? So if somebody wants to make an FHA offer on a condo and they want it to be reviewed, how would they go about doing that?
Okay, stay with the webinar here. All right.
Okay, I'll stop talking.
I'm going to get through that. So on a primary residence, it's 97%, 90% for a second home, and 85%. Although 80 is a much more realistic number on an investment property, just because when you do 85%, you got a super high mortgage insurance rate. 80, you don't have any mortgage insurance. All right. So what does that mean? So when we go through a full condo project approval process, and the reason why we would do that is because the borrower is limited on funds to closing, right? They're bringing, anywhere from 3% to 10% down payment, as opposed to a much larger amount, which you'll see in my future screen here. So that's what most of the situations are of the borrowers that we've been working with. So what does that mean? So we have to go through a condo approval process. So in that full condo project approval process, these are all the documents that we have to get from the HOA. We send them a questionnaire to complete. They have to send over their budget, declaration page, master deed, master insurance policy, and their bylaws. So that's a lot of paperwork, right? I mean, we're talking about probably, hundreds of pages of documents that we have to review to go through what's called a full condo approval process, okay? Why I'm telling you that is because that leads into your question, Jordana, which was, the length of time it takes. So a full condo project takes longer than a limited one does, okay?
Can I want to interrupt real quick, Mike, because I just want to make sure that I'm correct too. This is why I keep talking about the importance of working with lenders that are out of state versus in state and do a lot of condos and stuff.
You want to work in state.
Yeah. But yeah, the reason working with people like Mike is because he knows that all these documents are required. A lot of lenders that are in Wisconsin or the other side of the states, they don't know that the Florida condo, that you have to get all those documents.
Well, thank you for that. I would agree with that. That's a bit self-serving, but I agree with that. The other thing to know is if you're working with an out-of-state lender, there are specific condo rules that only apply to Florida. And very likely, all 49 other states have different rules than Florida does. So Florida is very unique in the way that they look at condos. So if you're looking at an out-of-state lender that may not be doing a lot of Florida deals, they may not be understanding of what those rules are. Okay.
So Mike, I have a question. So all of these documents, like you said, it's hundreds of pages. What do you recommend? How long does it take? Do you recommend that we talk to you about the particular condo before making an offer? How does that work? Do you have any tips on that?
Yeah. So I was working through a deal with Anastasia just 2 weeks ago, and I'll use this because it's a great example. The borrower's doing an investment property condo, and those can be the most tricky, which I'll get to here in just a second. And what I asked her to do was go to the listing agent and find out if they already know if there's any potential issues approving the condo. And she did, and lo and behold, the listing agent thankfully knew what she was doing and said, yeah, I don't think this condo project is going to meet the guidelines for an investor. And that, that saved the borrower $400 or $500 of getting all these documents. And it saved us a lot of running around and lots of time, because that would have been a very difficult thing to find out 2 weeks into the transaction, after a lot of things have been done and costs have been incurred by the borrower. So that's one thing that you can do. Go to the listing agent. Hey, are you aware of any issues potentially with getting this condo project approved? That would be the first thing.
I was just going to say the issues are probably, if I'm not Mike, if I might add, the investment concentration would probably be the reason for it to be kicked, right?
So potentially, yeah. So you're probably reading some of this down below, which is good. So investor concentration doesn't matter if you're doing a primary residence or a second home, but it does if you're purchasing the condo as an investment property. So as you can read here, there can't be more than 50% of units owned in the project that are investor owned. So just to say that back to make sure everybody heard me right. If your buyer is purchasing a condo as an investment property and the HOA project has more than 50% units owned by investors already, it can't get a full approval. Now it can get a limited, which is what I'll get to in these next couple screens here, okay? So you're correct. One other thing that just happened on a deal that Ryan and I did last 2 months ago, the budget. So the budget didn't set aside 10% of reserves, which is a requirement for Fannie Mae. Well, budget only had 8% reserves. Well, that wasn't enough. We couldn't do the deal. Borrower had to put more money down to do a limited condo review. They weren't happy about it, but they did it. And we got the deal done anyway, thankfully. But I'll get to that here in just a second. So that's why I put these sort of gotchas in here, right? Like these are the things that you want to be looking out for. So let me just read through these things here. Make sure one owner doesn't own more than 2 units if it's only a 20 unit or less project. One owner doesn't own 20% or more of the units if it's 21 units or more. Make sure the HOA has more than 15% of their units 60 days or more delinquent. So if there's more than 15% delinquency on HOA fees, that's a problem. 10% budget for reserves, I already talked about that. 50% investor concentration, that only applies when someone's buying an investment property, but that could come back to haunt you. And then make sure that there's no pending litigation. Now the litigation, if they have some, if it's something, simple like somebody had a dog and the neighbors sued them because the dog bit them or something, that's fine. But if there's litigation around, structural things or major lawsuits, that'll be an issue.
And I'll share this slide. I'll share this whole presentation with you guys because these are all those gotchas at the bottom. Those are really good to know whenever you're looking at condos and to provide that information to your client.
But so Mike, can you get around any of these requirements if you put more down?
Yes, great question. Who was that?
Jordana.
What do you mean? It wasn't me.
Great question. All right, let's go to limited reviews. So, so the requirements are greater for down payments, okay? So for a primary resident, you're required to put 25% down, meaning 75 loan to value. And a second home or investment property requires 30% down, okay? However, by putting a larger down payment down, all we require for the approval is just the condo questionnaire and the master insurance policy. That's it.
Easier.
2 things.
Yeah.
So where you avoid issues is that 50% concentration that someone just mentioned. Who was that earlier? Anthony, thank you. So that's what you avoid by putting down the 30%. That's what we had to do on Ryan's deal. Or actually it was because of this, because of the budget, but the borrower did have to put some more money down. And then also you avoid those budget issues, right? Like your reserves. So the only potential quote unquote gotchas on a limited review, which is, as you can see, is much fewer, is these, unit owners owning a very large amount of the units in the project, or delinquency, or pending, or some of the litigation stuff. Other than that, all the things that typically stand in our way basically go away. So when I'm talking to a borrower, right, when you say, hey, call Mike, he's your guy, or, go talk to Ruben, he's going to help you here. When we talk to those borrowers, and I literally just did this 1 hour ago, on a phone call, that borrower came to me and said, I'm going to buy an investment condo and I want to put down 20%. So the first thing I said to that borrower was, I'm going to encourage you to do 30%. Here's why. And I spent, 7 or 8 minutes explaining it just like I did to all of you. And the borrower's like, yeah, okay, I'll do that. So those are some things that we can do on the financing side, from the very beginning and set some expectations to prevent, some potential issues down the road. Okay.
Great.
One last thing I'll mention, there are certain projects that don't require condo reviews at all. These are fairly rare, but I'll mention them. I actually just did one in November. If a condo project has 4 units or less, you don't need a review at all. There's absolutely no approval process.
That's interesting.
I ironically just did one in November that only had 2 units, which is really rare.
It's 1 to 4 units.
Yeah, it's still common. It's still a residential condo. And so are the ones over 4 units. There's no difference. Same thing.
And then site condos, which we really don't see those down south, but site condos where they're located in a project consisting of all single family detached homes, which you'll probably never see. So more than likely you're going to be looking for 4 units or less. And that way, there is no approval process at all.
And also, there are associations that require a certain amount down, as well as. So forget about the lender. You have some associations like this,
Like Whisper Walk.
I think Kings. Doesn't Kings Point also have some requirements?
No,
Whisper Walk. Oh, sorry. They require 25% down. Is that right? Whisper Walk.
30, 20.
Sorry, Mike.
No, you're good. And that's a good point. Some of these associations, Courtney and I did a condo deal, and, the borrower didn't have a ton of money to put down, and she was excluded from some of the units that she liked because some of the projects required 25% down, but she was doing a full approval and she was only putting like 5 to 10% down. Well, but some of these condo projects don't really care what the mortgage financing guidelines are. They have their own guidelines. So you'll want to find that out first, because that could potentially be a deal stopper right there. So that, it's a good point to bring up.
Hey, Mike, it's Anthony again. Do you have any minimum loan amount?
Yeah, our minimum loan amount is $50K. 50.
That's pretty low.
It is,
Yeah.
it is pretty low. Are you sure about that?
No, most are like
Most 75, yeah.
Yeah. Cool.
Does everybody know what that means, the minimum loan requirement? No, so if your buyer's purchasing the 100,000 and they're putting 70,000 down for a $100,000 property, Mike can't do the loan because that's only a $30,000.
The lender won't do any.
Does what's his face?
Yeah. Chris?
Yeah. Thank you, Chris.
Yeah.
Okay.
It's funny. You asked about the minimum loan. I had someone that called me 2 days ago and they said, I'm buying like $100,000 condo and I'm putting $90,000 down.
Well, that's ridiculous.
Well, that is
Just borrow 10,000 from someone.
And I said, well, why don't you just put the rest on a credit card or something? I'm like, it takes 2 seconds, but yeah. So,
Mike, real quick, I want to ask you before we wrap it up. How has it been with like the warm introductions via text or email? Sorry, can you see me?
It's been good. And typically what's happening is that, and I think you all know this, but each of you are introducing Ruben or I over text or email. Most of it's text, either one's fine for us. And then we're responding to both saying, thank you for the introduction. We'll be calling you shortly, or we set up a time to call them. One thing that I'll mention that would be really helpful for us as we get busier and busier, if you could get in the habit, all of you, of putting those leads into the system and, tagging me or Ruben.
So you mean in sync, assigning it to you?
Sync, thank you. Yeah.
Absolutely.
So you guys know the second field on the assigned section is for the lender. And so we should remove the other lenders.
We removed them.
Oh, we did. Okay.
Yeah.
So you can choose their names, and that way they can access it and sing.
You should.
a label too.
Yeah, I do have a label,
Okay.
but we also have, it's either Ruben or Mike. So if it's a Spanish speaking lead or Mike's a little overwhelmed, we need to get it over to Ruben, you can assign it to either of them. But keep in mind too, and remember that if the lead is not assigned to either Mike or Ruben, and you try to notify them, they will not be able to access that lead to see your notes.
And you guys all have the permission to do that. So some
Yes.
people thought that they didn't, and they do. Okay, Mike, we have a lot to talk about. Anything else? We have about 2 minutes. Anything else you want to talk about before we kick you off? I'm just kidding. You can stay on, but
You're good. Anything you want to, well, Lindsay, there was one or two things that you wanted me to mention.
We can go over those in the Q&A on Thursday. So
Oh,
Dawn,
okay,
I
cool.
invited you and Ruben both to that, I believe, maybe just you for right now. But if you want to add Ruben to it, and then we can talk about those, and maybe we'll do like a short presentation next week too.
yeah, so
Okay, that's perfect.
that goes to the Q&As. We've asked Mike to show up, and that way, if you guys have lender questions as well, those can be answered during the Monday and Thursday 11 a.m. Q&A sessions.
Yeah, add Ruben to that too, if you wouldn't mind, Lindsay.
Yeah, definitely.
And anything you want to add there, Ruben? Anything you want to mention?
No, everything is there. Thank you so much. Happy New Year to everybody. I'm looking forward for exciting 2021 for everybody.
Yay.
Cool. Thanks, Ruben.
Awesome.
Ruben
Thank you,
does,
guys.
he does handle Spanish and English speaking deals, just so everybody knows. And he's super experienced, super seasoned. I know I've done a lot of talking here today, but just rest assured, he's just as experienced as I am. So don't let me over talking here think that he has less knowledge than me. So feel free to work with him as well. And both of us are here. So call us if you need us, and I'll let you guys get to your meeting. And thanks for having us on.
Thank you.
Awesome. Thank you so much, Mike.
Thank
All right,
you.
got
Have
it,
a
guys.
great day.
Talk to you soon.
Okay, so if I